Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Mr. TK Ramesh, Kalyanaraman, ED at Kalyan Jewellers joining in. Welcome to the show, Ramesh. A pleasure to speak to you as always.
Thank you. Same here.
Ramesh, let us start with the IPO that we've hit it for. I mean, this was something which has been a long awaited IPO, especially when you talk about the jewelry, segment as a whole, because there are very few listed companies in India in this space. Uh, with regards to the timing, right now it seems that the IPO market has again started to pick up steam. What made you think of getting it at this hour, whilst we were already in the midst of COVID?
Yeah. So first of all, on an IPO front, when does a brand or a company go for IPO? It is when they need additional capital for their kind of expansion or things like that, right? And when do you time it? When the industry is performing well, and when your company is also performing well. So when it comes to Kalyan Jewellers, if you look at, yes, COVID, our showrooms were closed in the Q1, Q2 slowly started kind of gaining momentum. Q3 this year, if you see, we are better than the pre-COVID levels. And it is not only for Kalyan, the industry is also behaving very positively. The post-COVID comeback for the brands like Kalyan, especially in the organized space, it is seeing good momentum. So first of all, Kalyan Jewellers has been uh, we have built a brand which is pan India. We are present across 21 states in this country. We have the existing market itself. We have space to go and top up stores. Okay, and the industry is also behaving well. Post COVID recovery is also good. So we timed the IPO now. So that is how the IPO is happening today.
Right. Ramesh, earlier, I think back then in 2020, when we were looking at the IPO, it was around 750 odd crores that we were looking to raise. What is the reason for scaling it down to 1175 crores?
So always when we file the DRHP,
Hmm.
we have the flexibility of kind of we filed it for 1,000 crore primary and 750 crore secondary. Okay. So SEBI gives us the flexibility to kind of bring it from 800 to 1,200, the primary. Okay. And secondary 375 to 1125.
Hmm.
They give the flexibility.
Hmm.
Okay.
Hmm.
So that flexibility we used. So it is not that 1,750 crore approval was taken to do a 1,750 crore IPO. It does not work that way. So we take approval for that so that we have the flexibility to make it from 1175 to 2,000 odd. So that is how it works.
Right. And if you could just help us understand with regards to where the usage of funds is concerned, because it is a two-part thing. There is an offer for sale as well. And,
Yeah.
I mean, there will be some funds that will be going to the investors.
Yeah. So the 1,175 crore IPO, 800 crore is primary
Hmm.
and 375 crore is secondary.
Hmm.
Primary comes into the business.
Okay.
Out of the 800 crore primary, 600 crore is being allocated for expansion of working capital.
Hmm.
Expansion of working capital for a retailer means to open stores and expand. So this 600 crore will be allocated for expansion. That is what it has been filed in the RHP.
Hmm.
Rest 375 crore, which is secondary. Out of the 375, 250 crore is sold by Warburg Pincus. We have an investor on board,
Correct.
and it is a partial exit for them. They have invested 1,700 crores in the company, out of which 250 crore they are kind of liquidating through IPO,
Hmm.
and the rest 125 crore is sold by promoters.
Right. So, when we talk about business expansion as well, Kalyan is one of the largest jewelers as well, in terms of, say, market share. Now, when we look at expansion, there is a lot of competition for this industry, especially in the unorganized space. However, the market share of the unorganized space has been depleting, and it's the organized space which is trying to take majority of the market share right now. Do we see any changes happening on the market share front only if you have to consider the organized space right now?
So, in this industry, as of today, more than 70% business is with the unorganized segment.
Mm,
It is gaining momentum every year. There is an organic growth or organic shift from unorganized to
mm,
organized.
mm.
But post COVID or in the COVID times, this growth has been kind of accelerated. Okay, because we see a lot of new customers coming in and from the unorganized segment the shift is the pace of the shift has increased. Okay, predominantly if you look at, people do not want to go to crowded streets or crowded malls or small shops in the villages. They want to come to standalone stores like Kalyan, where there is a basic hygiene which has been in practice, and also there is an automatic social distancing which is there because the showrooms are bigger, right? And that is really seen now. That is the major reason of the Q3 doing more than pre-COVID levels. So, and this momentum is going to continue, is what we feel. And again, the stickiness in our industry is very high. So
Hmm.
once a customer is with Kalyan, then they hardly go away from Kalyan,
Correct.
because
Correct.
that is again the reason why the unorganized segment is still doing 70%, right?
Hmm, hmm.
Why, even though a lot of players are there, people are comfortable with their own family jeweler or a small jeweler in their village because of the stickiness with the brand. Okay, the same is getting as a positive momentum now because we see a lot of customers coming from an organized segment to Kalyan.
Hmm.
And again, for us, again, because we have a unique marketing tool called My Kalyan. So what is My Kalyan? My Kalyan is a neighborhood store. It is more of a hub and spoke model wherein these centers are in the rural parts of our country. The major objective of My Kalyan is to channelize business from the unorganized segment to Kalyan Jewellers. Okay. So what they do is that My Kalyan does not have inventory. It only has field marketing staff.
Hmm.
The Michaelian team, what they do, they get in touch with all the marriage and marriage ecosystem vendors like marriage halls, caterers, event managers, astrologers, etc. And they take the lead from them, go to the customer's household, talk to them about the brand, talk to them about the hyperlocal products which we have,
Hmm.
the price range which we can kind of offer, and bring them to Kalyan Jewellers. So now, when the shift increases or the pace increases, we believe that we will be in the front row because we are already there in the rural hearts of this country.
Right. But with this, when you talk about rural India as well, if you could just help me understand, uh, right now, because of COVID, the companies that have done well is a lot of support has come in from rural India. Urban India was still very slow. Currently, the kind of recovery that you saw in the third quarter, now that you're back to somewhere in terms of pre-COVID levels, has the growth come back from rural India or has the growth come back from urban India?
Yeah, so because it has not been mentioned in the RHP, I'm
Hmm.
not allowed to
Okay,
kind of
okay.
exactly tell.
No
But
problem.
on a industry report, it is showing the same kind of behavior
Hmm,
everywhere
hmm.
in this country.
Right. Another aspect, Ramesh, is that uh, overall, if you go to see over FY 18 to 20, the revenues have declined almost to 2.5% annually. If you could just help us understand what's the reason for this decline,
Yeah,
and
so
going ahead, if you're
yeah,
able to give any forward looking statement from a next 5 year perspective.
sure. So first of all, let us talk about the 3 years which is there in
Hmm,
front of you in the RHP. Okay. Out of the 3 years, the center year 2019, okay, there we had a degrowth by 10%.
hmm,
Okay. Predominantly, it was because of two reasons.
hmm.
The first reason or the major reason was we changed the strategy in our My Kalyan network.
Okay.
So My Kalyan, I told you that they bring business from the unorganized
Ano.
to Kalyan
Hmm,
Jewellers. Okay, it is a marketing tool only. What we as a brand tried is to make it as a revenue center by itself by keeping low ticket products in the My Kalyan centers. We thought that the low ticket revenue will come in My Kalyan itself, and the high ticket will be diverted to Kalyan Jewellers.
hmm,
But that did not work. That strategy did not work
hmm,
well
hmm,
because the bandwidth of the team They could not focus on either of them. So revenue did not happen at Kalyan, and also they could not channelize as they were doing before. Okay, so actually the Kalyan contribution came down that year. That was one reason of the revenue drop. The second reason for the revenue drop is a major flood which happened in South India, and that too in the major festive season.
Hmm.
And that flood was after what 100 years we saw
Correct.
a flood in Kerala. So people did not know how to respond. People lost a lot of what do you call the they lost their assets. So
Hmm.
they had to
Hmm.
rebuild their assets, like the home was damaged, their electronic gadgets, electronic equipments, their vehicles, etc. got damaged, and they had to rebuild that. And we saw a revenue drop because of that. So 2019 is a rare year for the brand where we de-grew by revenue, and we de-grew by 10%.
Hmm.
But after that, 2020, we again grew by 6% on revenue.
Hmm.
But that too, we lost a March month almost fully on COVID.
Correct.
If you had adjusted to March, a usual March month revenue,
Hmm.
we would have grown by 10%. Okay.
Okay.
So that is why the figures seem to be very flattish, because there was a degrowth in that center year, which you see. Okay. And if you look at now, this year, financial year, we almost was a washout for Q1 because of COVID. Our stores were closed across India and Middle East. Q2, we started getting, or we started the momentum was slowly starting in Q2. Q3, we are better than pre-COVID levels. And if you look at 9 months this year versus last year, we are at 76% revenue of last year in India.
India. Correct.
And the PAT again for the 9 months India, we are at 72 crore this year versus the PAT of 99 India. Okay.
Hmm.
So even with the 76% revenue only. So again, that shows how the brand is going to look forward, because we have reduced our OPEX this year by about 135, 140 crore in India, because the expansion phase of the brand is over, wherein
Hmm.
when you expand into new geographies, when you expand into new countries, your branding expense will be more, and your opex will also be more.
More.
And
Right.
now the phase is over, because we are already established in 21 states in this country.
Hmm.
We have created the brand name, we have created the purchase ecosystem, we have created the customer what we call database, and the Kalyan centers are also kind of established. Now it is a leveraging phase, wherein that is why in this 9 months, even with only 76% revenue, we have a PAT of 72 versus 99 last year. Okay, and this is how it will be taken forward as well.
Right. So with this, in the last few years as well, Kalyan has actually aggressively expanded its stores as well. So
Yeah.
going ahead, uh, are you expecting that the additional revenue and profitability that we are going to see will be led by higher contribution from newer stores, or will it be higher contribution from the existing stores?
Yeah. So first of all, our historically we have been expanding in the range of 10 to 12 stores per year.
Correct.
Okay. And that was when we were in a phase where we were entering into new states and new countries, wherein that the the work which has to be done from the brand will be much, much more than what we are going to do in the future. Because now what are we going to do? We are going to add stores in the existing region, right? Because there is no new region for us to go. Okay, so it is adding stores in the existing region. The advantage there is that the OPEX will be lesser, marketing
Hmm.
spend will be lesser. Predominantly, it will be only store related expenses,
Hmm. Hmm.
because the corporate expenses are already taken care by the existing 107 stores in India, right? So if you look at the revenue contribution way forward, of course, there will be revenue contribution from the new stores which are going to open. But again, there will be a healthy revenue increase in the existing stores as well, right?
Hmm.
So both this put together, at a lesser level of OPEX, at a lesser level of branding, the returns will be much higher. That is how going to take forward the revenue in the coming years. And again, if I just tell you the historical, it will be in the range of what, 35 crore per store on inventory.
Correct.
And a 5 to 6 crore on capex on a 5,000 square feet store approximately. Okay. So now if you look at the 800 crore which we have raised on primary, out of which 600 crore will go for this.
Right. So Ramesh, with this again, if you have to see the revenue contribution from India and Middle East, if I have to compare FY20 to the 9 months, India's contribution has increased, Middle East has gone down. So are we expecting this kind of trend to continue?
No, first of all, I will tell you, Middle East, the post-COVID recovery has been slower than India. So now in the 9 months, only 14% contribution has been coming from Middle East. And the IPO money, what we have decided to do is to deploy it fully in India because it's an Indian IPO. And we are going to deploy it this year itself. That's the plan. So of course, the percentage from Middle East will come down because your India base will go up. Okay.
Correct.
Middle East, once the market settles post-COVID, when it comes back to the pre-COVID levels, then we will deploy capital which has been earned from there. The internal accruals which come from Middle East will be deployed in Middle East. The money, the IPO money which we have raised in India will go for our Indian expansion.
Right. And then with this, another aspect that comes up is that in terms of where the industry trend goes for jewelry companies, it's going in for gold metal loans, basically gold on lease, taking into consideration their lower cost and natural hedge. However, Kalyan is doing completely opposite. So what's the reason for that?
Now, on an average, if you look at our gold loan has been in the range of 50%. Okay. It has always been in the range of what, 1,200 odd crores in India. And again, what, 500 to 600 crore in the Middle East. Okay. So on a total, it has been in the range of 1,600, 1,700 crore metal loan. But it was a rare situation wherein in February, March, in the last financial year, when we saw that cash flow is not going to come, when the stores got closed, there is no revenue which is going to come.
Correct.
If we will not be able to rebuild the GML, we will not be able to service the GML. So we had to come out from the gold loan at that time. But then from June, we again started rebuilding the GML, and we are kind of in the range of thousand odd crores, which is going to, again, rebuilding of gold loan. I would just tell you, it cannot happen overnight.
Correct.
When the revenue comes, only you can start rebuilding the gold loan. Okay. So we are always comfortable in the 50% GML, which will be in that direction only. In the next 2 or 3 months, it should come to that level.
Right. So then do we expect the borrowing costs also to substantially then reduce? Because that is something which has been showing weakness in the balance sheet. So that will also better from here on.
Yeah. So when GML is builded back to normal, the lending cost will also come down because GML, the interest rates are much lower than our usual, what you call OCC, which we call the overdraft.
Right. And Ramesh, with regards to debt to equity ratio, it's around 2.1 currently. Now, how much of the IPO proceeds are we going to use to pay off debt?
No, the current debt is in the range of 3,500 or 3,600 crore.
Correct.
The debt equity ratio is in the range of 1 is to 1.7 as of now. And if IPO money comes in, the debt equity ratio will immediately come to 1 is to 1 range. Okay. And way forward, we don't intend to increase our debt. The internal accruals will add upon and again further bring down the debt equity ratio to less than 1 in the coming years. So that is the plan.
Right. And very lastly, Ramesh, overall, with regards to, it's another, say 3 to 5 years from now, can we see Kalyan becoming one of the first one in terms of market share?
No, so I am not supposed to tell about 3 to 5 years.
I think.
But of course, the vision of the brand, why we created this brand to what it is today. Kalyan Jewellers is one of the largest jewelry companies today. It has presence across 21 states. It is one of the trusted jewelry companies in the country today. It is a hyper-local brand. It has My Kalyan network spread across the rural India. So now it is to leverage all that, right? So that will happen in the coming years is the only thing which I can or I'm supposed to say as of today.
Absolutely. I think I will have to catch you post the IPO. I mean, it's listed, and then we will chat in detail about the same. Thank you, Ramesh, so much for joining us.
Thank you very much. And I'm very happy and excited because day one of IPO, the response which we got
was absolutely fabulous.
tremendous. And the retail book is oversubscribed. And day two, we are starting now and we expect a good IPO. Thank you very much.
Absolutely. I think it is going to be a blockbuster, hoping to wait for the listing in the next couple of days. Congratulations. Good luck. And speak to you soon again, and regards to everyone.
Thank you. Thank you.